Hey, what's going on, everybody? Welcome back to Bonafide Investing, where we talk all things high yield investing, as well as futures, options, and really investment goals in general. If you're new to the channel, welcome. To give you a little bit of background about what we're doing here, I have been experimenting with high yield strategies for almost 2 years now. I've owned hundreds of high yield ETFs and closed end funds in that process. And what I've done, I've narrowed it down to a handful of my favorite, ETFs and closed-end funds that I have constructed what I call an all-weather high-yield portfolio that I've called Cash Flow Life here, that seeks to, number one, pay my bills, and number two, maintain and pay down my margin. I have deployed about a quarter of my net worth into this strategy. This is not the only way I invest. Again, the sole purpose of this portfolio here is to pay all my bills, keep me free from 9 to 5, allowing me to enjoy what I enjoy doing. Please hit like and subscribe if you like what we're doing here. More subscriptions, more support, more videos I can keep making here. Nothing here is financial advice, not now, not ever. Although I was once a financial advisor, I'm not responsible for any of your wins. I'm not responsible for any of your losses. So with that said, what I want to focus on today, I want to focus on if I were to start out with a small portfolio, how would I construct that? Okay. Now, I will be very clear. There's no one size fits all. Everybody has different goals. I've talked about on this channel, always know your why. Why are you doing something? Have a purpose. Be deliberate, right? Past few years, you could have thrown a dart at a dartboard, hit a stock, and probably made money on it. Everybody looks like a genius in a bull market, right? But the key is that, I think we're in for a massive bear market. I'm even going so far as to say I think we're in for a Great Depression 2.0. When will that happen? Nobody knows, but I think we're close. So I always keep myself hedged, right? And I think that's very important. But what we'll talk about today, and again, this is not advice, but this is what I would personally do if I had to start from scratch, maybe $5,000 to $10,000 or even a small portfolio. And it could be because you want to pay all your bills, right? Leave the 9 to 5. It could be that you want some side income to pursue hobbies, travel, more opportunities for your children, whatever that might look like. But again, it's got to be your why, okay? So it's really not complicated, actually, what I would do. So if I were to start out with just, let's say, $10,000, we'll just use that easy round number. What I would first do, I'd be looking at a lot of high yielders, okay? And I'll give you some examples. I'm not telling you what to buy, but what I would do, I'd be looking at something like a KYLD and ULTI, even a YMAX and WPay. Okay, and I'd be looking at these just to get that high yield initially. Because if you're starting with a small portfolio and your goal is high yield, what I would do is I would just be getting as much yield as I could. I wouldn't worry so much about hedging at this point because, again, let's say we're working with $10,000. I don't want to be getting that yield, okay? But you don't want that yield sitting in cash, right? You want it continually working. You want it compounding. You want it snowballing, okay? So what you could do, something I would do, I'd put maybe, 5,000 in WPay, 5,000 on YMAX, or, 5,000 on ULTI, KYLD, or any combination thereof. I'd actually put 2,500, I think, in each of those four, okay? ULTI, KYLD, WPay, and YMAX, okay? So 2,500 in each of those four. You'd be getting an annualized yield on average of about, 50%, right around there, okay? So we'd assume right around maybe like a $5,000 annual distribution. I would take those distributions as cash. I would put them into then lower yielding, okay, higher quality funds. When I say quality, it doesn't mean that they're bad quality funds, but you're going to get NAV erosion, right, at 50%. Unless we're just in a massive, massive bull market that's moving up pretty steadily, you'll see that NAV erosion. You'll see it pretty quick. So I take those distributions and I put it into something like maybe a SPY-I or a QQQI, right? They yield closer to that 10 to 12% range. And I put it in those to, track the indices a little bit closer while still producing high income, okay? Another one I like, especially if you're starting out with maybe 10K and you want those distributions fast, like weekly, QLDY is a good bet. I like them because they distribute about 40% pretty consistently, and they pay twice a week. So you're getting 104 distributions per year, and that's just more cash into the small portfolio, that you can again deploy that back into something like SPY or QQQI. Now, if I was starting out with $10,000, I wouldn't be worrying so much about the diversification quite yet. And a lot of these funds that you would be buying initially have some diversification. They are fund of funds, right? They do own the underlying single ETFs, or they have options on, 20 to 30 positions, if not more. So that's what I would do to get started. If you can leverage margin, I would use the margin as well. Okay. I would actually use the margin, as much margin as I could at $10,000. The reason for that is just, again, it's more income for the portfolio, but be wise with margin. Don't ever use margin if you don't understand margin, and be very careful. Just know all the risks. Okay. So again, initially you want that high yield hit right out of the gate, cash flowing you. And then you're putting it back into those lower yielders with less NAV erosion, right? And letting those grow and compound. Now, one thing you could also consider is reinvesting. Okay. And I don't like to reinvest on margin, but if you're not using margin, you can even reinvest a lot of those distributions while you're growing it and building it back into something like QQQI and SPY. Okay, so that way you're not only taking the distributions from your highest yielders like WPay, YMAX, ULTI, or KYLD, but you're also putting those distributions plus the reinvesting, right, of QQQI and SPY to really, I guess, turbocharge the growth in those funds. Once I started growing this, okay, I would start then looking at, okay, maybe I want some bond exposure. I want some gold exposure. I want some maybe hedging, right? Maybe I want some inverse funds. Maybe I want to start looking, potentially buying some puts to just shelter the downside, maybe some crash insurance. So those are some of my thoughts. I think how I would go about, if I had to reconstruct Cash Flow Live from scratch using maybe $10,000, this is what I would do. Okay, this is how I would go about it. So hope that was helpful. I will make a video. I've had some good comments on some other, making some other videos as well. And I think, we've got the Fed tomorrow. The CNN Greed and Fear Index is back to greed. The complacency in this market is really breathtaking. I don't know how else to put it. Markets like this make me extremely nervous. I think gold, God's money, is telling us to be very careful. I think there is some very, insidious things going on, under the surface that I think maybe the stock market hasn't picked up on yet. Bond markets are potentially cracking right now. So I think right now is the time to be cautious. I think there will be no change out of the Fed tomorrow. We'll see, but I don't think they're going to say or do much. You've got the current Fed chair leaving in about 4 or 5 months. Remember, the Fed is made up of many people, not just the Fed chair, right? But typically every new Fed chair has been tested pretty heavily by the markets. So I think that we're going to see a sell-off pretty soon here. I think the first half of 2026. And I think we're long overdue for at least 20% plus. Okay. So those are some of my thoughts on the week, what's to come. Like I said, I'll be making some more videos here. I'd like to make more on just specific areas that I think my viewers, it's important to them. So send me in the comments what you want to see. And love to hear your thoughts, your feedback. And, just a reminder, always trust on God, rely on the charts and math, and just ignore the noise, right? Ignore the bankers, the politicians, and the things that don't really matter. Hope you got something from this video. Have a great day.